Hi traders, it's Alberto, and today's December 9, 2016. And this tutorial, I'm going to go over some scalping strategies. The markets have been quite volatile, if you've noticed, and this typically happens right before the holidays, and markets are thinner. And also, we have a new President-elect Trump coming into office, and that certainly would make the markets, especially the stock market, very volatile. So trading using a scalping method on a 1 hour chart, let me just go over a very simple technique that I use using a few things: support and resistance levels, candlestick patterns, and a stochastics indicator settings at 5, 3, and 3. So what I do, for example, right now there's a nice trade set up on this pound dollar where it's hitting a previous support level right there, and stochastics notice that it's oversold on the 1 hour chart. So this would be an ideal setup. Now, I cannot take the trade. I have to wait till this 1 hour candle finishes. If it closes as an inside bar, then yes, that would be a trade to take. So let's look at over some trades that were some good trade setups, simply based on this oscillator and price action and support and resistance. Here's one here that we have down at the bottom. We have a previous resistance level from the back November 30th, and priced retouched that level, and we have a bullish engulfing candle. We have a morning star here, and notice the stochastics indicator is oversold. So that would be a trade setup. That would be a qualifier. That would be a high probability trade setup. Also notice that the market had sold off quite a bit previous to this level of support. Okay. Another one would be, for example, here, where we have a bearish engulfing candle at a previous support level from a few days back that turned into a resistance. So this level of support that you see here has been broken, and market remembers that area of support and retest that level. Gave us a nice candlestick pattern. The candlestick pattern, the reversal candlestick, is our alert, knowing that it's hitting a previous support, turn to resistance, and the only thing you need is the stochastics to be overbought, and it was. Okay, so this is very important that you have at least 3 of these things that line up in order for you to have a high probability trade setup. Otherwise, it may not work out. Okay, so what I'm going to do is just go back in history, look at several pairs, and see if in fact we do have a trade based on these 3 parameters. Okay, so here's one up here. So I'm just going to take random trades that I see. Here we have resistance, resistance. We have a hammer here. Price never broke above the swing high. We have an inside bar here, and not only do we have stochastics overbought, we also have divergence on stochastics. Okay, so if you're not familiar with stochastics, using divergence indicator on stochastics, it works is the same as using MACD. The only difference is that you don't need to qualify this on a higher time frame. Okay. Again, here is resistance, resistance, the second day, the third resistance. We have a hammer, and there you go. There's your alert. You have a hammer, stochastics is overbought, and this trade worked out. Never closed above the swing high. Okay, so I practice this as much as I can so it'll keep me fresh as to the strategy that I use when I scalp. Previous support resistance levels, stochastics oversold or overbought, candlestick pattern. Okay, reversal candlestick pattern. So again, just going back in history and just pointing out, looking at previous support or resistance levels. Here we have a support level, and then price came well close, but we do have a candlestick pattern here to hammer, and stochastics is oversold, so we would take a trade. So if you don't have a previous support or resistance level, if you don't have a candlestick pattern or reversal candlestick pattern, and if you don't have stochastic indicator overbought, oversold, it's not a valid trade. It's not a high probability trade. Some of these trade setups may last for a few hours. Some of them may last for more than a day. It just depends on the setup, on what happened previously to the setup. Like here, the market sold off for a day and a half and it hit a previous support level. So it rallied to at least a 50% retracement level. Some trades that came back to a support level continued on for several days. And of course, we wouldn't know if that would happen, but at least you know where the support and resistance levels are. Okay, so let me just find a very good trade setup, an ideal trade setup. Just again, looking at previous support, and let's draw a line at a previous support. So here's the support. Touched once, twice, and then the third time it gave us a hammer. And retested the lows, but never closed below the hammer. Okay, so this would be a good trade setup. A hammer generally represents a complete change in sentiment, change in direction. There's your hammer, there's stochastics oversold, and there's your trade, and the market completely reversed for at least 4 days. Okay. Here is a setup, not quite a support, a resistance level, but we do have an inside bar with stochastics is overbought, and I would probably assume this is a Fibonacci level up here. So if I took my Fibonacci tool and draw from the swing high all the way down to the swing low, market came down to a 50% retracement level right there. So this is another indicator that I would also use to find resistance and support. Okay, let's look at another pair. This is the pound Canadian dollar. And here's a resistance level. First touch, second touch, third touch. A third touch gave us an inside bar. And I just have to add the stochastics indicator. And there it is. We have, at the time of entry, stochastics indicator was starting to head down, but it was not oversold. It was still overbought. So that would be one touch, two touch, the three touch, inside bar, and there's your trade. Okay. Again, here is a resistance level. There's a bearish engulfing candle, stochastics overbought. That would be a trade. And then coming back to the next couple of days, the following week, we have stochastics is overbought, and we have a bearish engulfing candle. So these trade setups are very, very, very high probability trade setups if you know how to recognize a candlestick pattern, make sure is at an overbought or oversold condition or a previous support or resistance level. And essentially that's it. Okay, anywhere else that you take a trade is what is considered what is called a no man's land. It was very difficult to take a trade because you don't know if that trade has any legs, any room. When you trade based on support and resistance, first you'll know where your resistance level is. You can place a stop loss very close to the resistance. If you place a trade, for example, here, your stop loss would be all the way down here, and you actually had maybe took this trade late or try to take a trade hoping, crossing your fingers, that it's going to continue to rally. Where it may not rally, even though it did, but taking trades when stochastics is oversold or overbought is your best bet. It's actually the best area. So you want to have the patience and the discipline to be able to take trades at specific times and areas. Okay. A great example on the 1 hour chart in Euro Australian dollar with price rallied all the way up to a previous resistance level. Stochastics was overbought, gave us a nice hammer, and there's your trade. And it continued for 2 days. Okay. Another example on the pound yen. Here's a previous resistance level over here, and price retested that level of resistance. Notice the stochastics is overbought, and we have several reasons here. We have an inside bar, we have an evening star, so anywhere around this level would be a great trade. 145.60, 145.70 area, and the market sold off for 2 days. So I can go over 100 of these examples, but I just wanted to show you and just explain that trades usually occur at specific times or specific areas. And all you need to do is just recognize it's quite simple. It's just find those areas of support and resistance, wait to make sure the stochastics is overbought when it hits a resistance or support, look for a candlestick pattern, a reversal candlestick pattern, and then just execute the trade. And let me see if there's any trade setup right now. There's nothing. We have a bearish engulfing candle, but it's not at a real previous support and resistance on the pound yen right now. And it is Friday, and Friday are not the easiest day to trade. Now, if it came all the way up to 145.60, which is a strong resistance level, and then there was a candlestick pattern, then I'd be very interested in selling up at these levels up here, but that's not happening at the moment. And that's it for this tutorial. The only other thing I wanted to announce is the course that's coming up in January. There's still spaces open. Let me know if you are interested. Also, we are going to be using a new platform, and it's very exciting because I've been looking for a trading platform that U.S. clients can use, because if you are a U.S. client and you trade Forex, you know that there are so many restrictions trading Forex. You can't hedge. You only have 50-to-1 leverage, and you can't open up a trading account in another country because that's forbidden. Forex traders will not accept you. There is, however, one offshore, if you can call it offshore, it's in the Cayman Islands, and they are U.S. compliant. So it's like opening an account in the U.S. because the Cayman Islands are not considered offshore as far as the U.S. is concerned, because if you open up an account in the Cayman Islands, a Forex account, then they have to be compliant. And if you notice any Forex broker outside the country that you initially had open up an account, then later they tell you, well, you have to close your account because we can't accept U.S. clients. It's simply because they are not compliant with the U.S. regulations and tax regulations any longer. So I'm excited about this company. It's called Xenia. Email me if you have any questions. I'll be promoting this website, or rather this broker, in the near future. So have a good trading, or rather have a good weekend. Talk to you guys next week.